right, let's do it.
I'm ready.
John? Perfect. Winners and losers. This is part of our Zero DT series. Zero DTs out of the monies. Yesterday, we did a Zero DT trade. And yesterday we did a Zero DT trade. And unfortunately,
you were able to manage it well. You rolled up the put, you stayed mechanical, and you scratched it.
I was able to manage it really well.
But some would say you were gifted. Is that how you were able to do it?
Some would say I was gifted, but some would also say, oh, boom, 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 out go the lights. The other problem is with Zero DTs is yesterday I did an at the money straddle list. I did an iron fly, and I don't like the at the monies as much as the out of the monies. Today's segment on Zero DTs is on out of the monies. My issue with at the monies, I just think I think you have to make too many adjustments to keep your deltas in line.
Sure, your deltas grow pretty quickly.
I think the out of the monies make the most sense. Let's go take a look. Historical backtesting provides a remarkable opportunity to assess potential trades. Yet deciphering the outcomes can often be challenging. To make sense of these results, we frequently resort to summary statistics. Typically, we depend on average P&Ls calculated as net P&L divided by the number of trades to identify promising strategies. However, particularly in smaller accounts, there's a marked difference between a strategy that loses $27 on Monday and then recoups with an $8 win each day, Tuesday to Friday, compared to a strategy that steadily earns $1 a day throughout the week, even though both end up with a net profit of $5. We have previously broken down the size and variability of winners and losers for iron flies, but today we're going to look at out of the money iron condors. By the way, I watched that iron fly all day yesterday.
Yeah, you were pretty diligent about it because you were...
No, after I got out, I watched it to the end of the day. It didn't move all day. I bought it at 19:05. It was 18:85 in the afternoon, 19, whatever. And if you didn't make the adjustments, you were out of business on that trade.
Sure.
Let's go to the next slide, John. The study for today, using over 2 years of data in the Zero DT SPX options collected every 10 minutes, we considered selling Zero DT iron condors at 9 a.m. Chicago time, plus or minus 5 minutes, every day with a variety of short deltas and wing widths. The winners were closed in the first 10-minute snapshot. They were found above 25% of the max profit. Losers were left through expiration. All the trades were assumed to go off at mid-price. So you can give up a nickel if you want to get a more accurate number.
Sure.
Next slide, please. So the first one we're going to look at is iron condors short 30 delta. We usually wouldn't use the 30 delta. We'd probably use 20, but $10 wings, $20 wings, $30 wings, and then $60 wings, which is the synthetic strangle. I mean, every number on this board is predictable, in my opinion. The problem is that with $30 wide wings, the net mean P&L was a negative number. And the $10 wings, forget about the synthetic strangle for now. The $10 wings, the tightest, probably most conservative play worked out the best for net mean P&L. It's kind of weird, but that's the way it worked out. Let's go to the next slide. So this is more in line with what we would do, using 20 delta short and 10 or $20 wings, the first or second. We probably wouldn't do $30 wings, but you certainly could. This is the slide that absolutely makes the most sense. This is what I would push anybody to on Zero DTs. The win rate.
And we do. This is where we go.
The win rate's about 90%. You don't have to make that many adjustments. It's a straight iron condor. The average winner is still decent. If you're waiting for 20, if you're waiting for 25% across the board. The average loser is totally reasonable, and the mean P&Ls are all strong. As you get closer to at the money, everything gets so much more challenging. As you stay further out of the money, everything just seems a lot easier. And the average mean P&L is still strong. The average loser is smaller. The win percentage is higher. It's just a lot of stuff here. Let's go next slide. I mean, that's what we do, is the 20 delta with $10 or $20 wings. It's your call. And it's been really successful for us as well. Some of the takeaways: evaluating winners and losers separately clarifies some of the trade-offs that we make when it comes to strike selection. Trading further out of the money meant smaller credits and smaller winners, but more consistency of results. Meanwhile, the size of the losers largely depends on the win widths. Synthetic strangles were more net profitable than their truly defined risk counterparts, but they require significantly more capital, and you got to be comfortable with an occasional large loss. And the zero DT marketplace has been very rewarding for retail premium sellers. Now remember, we haven't had a lot of blowups.
Right.
Volatility's been capitulating for the last month and a half.
Right.
So that's why people have done really well. Provided winners are managed attentively, and it is up to you to determine where the scope of winners and losers, where you want the scope to fall. I think it's important to put things in context. When you're in a volatility environment that is contracting almost every day, you're going to have a lot of winners. Like,
yes, you are.
Like this morning, if you traded earnings last night for, for any of those stocks, and you sold premium, you did good.
Yes.
Because you didn't have to take any pain. And the market's been like that now for, almost 4 to 6 weeks. Mm-hmm. It doesn't always stay like that. And you have to just be aware that there are going to be times when it's going to get ugly.
Absolutely. Now, that's where size comes in, right? Which we really didn't talk about here. Keeping it small, right?
Yeah.
Keeping it inside your parameters. Very good. Sadnov, we're going to take a quick 90-second break. We're going to come back. We got fan favorite Mr. Scott Sheridan coming up next from the Scott Sheridan Studios. Immediately following these messages, we're back in 90 seconds. Tasty Live.
If you're not subscribed, subscribe right here. And if you want to meet me and the team in person at our next live event, hit the link at the top of the description.